Let's chat about one of my favorite topics, renovation financing. And part two of this is going to be energy efficient upgrades and qualifying for rebates through Energy Upgrade California. You can currently qualify for up to $6,500, and I'll walk you through in part two on how to do that. Today we're going to cover the VA renovation loan, the FHA 203K, and the HomeStyle renovation program. We aren't limited on the repairs that can be completed on the FHA full 203K and the HomeStyle. We can do kitchen and bathroom repairs, we can do structural repairs, we can do foundation repairs. I've seen people, I have a couple of current projects right now where we're actually adding units to properties. We're taking things that were not permitted and then helping with the construction financing and getting those items permitted. So there's several different things that we can do with the renovation loans. And that also includes appliances. People can add solar, they can upgrade their heating, they can add air conditioning. And here's a more thorough list, but you can see here we'll also do replacement, addition of windows and doors, roofs. If they want to do a roof and add solar, we can do that since solar is so popular right now. We can do re-siding of the exterior, and the 203K and HomeStyle will also let you do pool repairs, pool additions, landscaping, drought-tolerant landscaping, all of those buzzwords we're hearing right now. We can do those with both of these options. With the FHA 203K financing, we're going to focus on the full 203K, and that can go up to 96.5% financing of the after repairs value, also known as the ARV. I call it the renovation goggles. The appraiser goes out to the property, they have a copy of the bid in hand, and they're looking at the property as if all of the repairs are already completed. So all of the financing will be factored off of that after repairs value. For the standard 203K, the full 203K it's also known as, there's a $5,000 repair minimum. Major repairs are okay, and we can go up to 50% of the loan amount. So let's say the new loan amount is $300,000, 150 of that, $300,000 can be used for renovation. Minimum credit score is 640 for this program, and we can do, as you already know, the kitchen, bath, structural, but what I am doing right now that I think is really great for people that want to earn extra income on their home is we can actually add a unit and turn the property into a 2-unit or up to 4 units and have an income-producing property. That's not for everyone, but it's an exciting option for people that do find that interesting. All the work must start within 30 days and be completed within 6 months. So a typical purchase or refinance escrow is about 30 days. After the 30-day window, the contractor can get the project onto their calendar. We need it on the calendar to start within 30 days of closing, and then it must be completed within 6 months. The FHA loan, like all FHA loans, requires mortgage insurance for a minimum of 11 years. In most cases, it's the life of the loan for 30 years, unless you're putting down a significant amount. The monthly mortgage premium on the FHA program was recently reduced. It was reduced from 1.35% down to 0.85% when you're at the 96.5% loan to value. And on average, I would say for a $300,000 purchase price, that would be roughly $100 a month savings, so very significant savings. This program is for primary residents only. It's okay to own other rental properties, but the home that we're doing the renovation loan on has to be the primary residence. Renovation loan and energy efficient mortgage, what does that look like? So on a $300,000 loan, if it's a purchase loan or a loan balance, if we had a 50K project, we would add a 10% contingency reserve, so that would be $5,000, and our new loan amount would be $355,000. The contingency reserve is there in case any repairs are needed as the project's moving forward. Sometimes during demo things are found out, sometimes through the project, usually something comes up that needs to be covered, and that contingency reserve is there for that. If all of the contingency reserve doesn't get used, a homeowner or home buyer can use a change order to add to the project, or they can take that amount and apply it towards the principal balance once all of the renovations are completed. Both of those options are available and completely fine to do. The contingency reserve, a lot of the times I see that get used for change orders and people could add things to the project that they didn't think they could do before. Next, we're going to cover the HomeStyle Renovation Program. It's a conventional loan through Fannie Mae, and this is for primary residents. You can do as little as 5% down, or if you're refinancing, have as little as 5% equity based on that after repairs value. If you're an investor, you can put down as little as 15% down off the after repairs value, or you can have as little as 15% equity. One of the reasons that I love this program is that if you have less than 20% down or less than 20% equity based on the after repairs value, the loan has mortgage insurance, but that mortgage insurance can be removed once you reach the 80% loan to value just by naturally making payments, not factoring in appreciation in the property. And it's just such a great solution when looking at the FHA loan, which has the mortgage insurance that can stay on for the life of the loan in most cases. And we know already that the financing is based on the after repairs value. This is for credit scores of 660 plus. You can do major repairs, and the same thing as the FHA 203K full loan is that there's a minimum of $5,000 in repairs and the max of up to 50% of the loan amount. And again, start within 30 days, complete within 6 months. Our VA renovation program, this is something that is only for iMortgage. We rolled this out a while back, and I'm so excited about the VA renovation loan. For me, my husband was in the Air Force. To be able to help out veterans is amazing. And my whole goal is to, one, not have a veteran move into a home and then start using credit cards to do repairs on the property. And then number two is let's get sellers excited to accept VA offers. They should be excited to accept an offer from someone that has served our country or is currently serving. And I really believe that this loan is the way to make sellers excited. They just get nervous about having to do a bunch of repairs before closing when maybe they're already tight on funds. And this alleviates that issue. The VA renovation loan has some restrictions. This is not for structural repairs, and we cannot do landscaping. There's a minimum of $5,000. Major repairs are okay, and we can do up to 50% of the loan amount. Again, down to a 620 plus credit score. We can do kitchens, baths, and we, on this program, have to have the project finished within 3 months of closing. So if the offer is made on the property, the loan would close within the typical 30-day time frame. After that, project must start within 30 days and finish in 3 months. The VA renovation program is a little bit unique on the way that you make an offer if you're using the program to purchase. So let's say you are buying a home for $300,000 on the HomeStyle, and on the FHA, you would just buy the house at $300,000. But in the back end of the loan program and us working on it, on the back side, we would increase the loan amount and do all of our numbers based on that after repairs value. On the VA renovation, what happens is you make your offer for, let's say it's again $300,000, and let's say you're doing $25,000 in repairs. So you do your offer for $300,000, but then there would be a sales contract addendum, and that addendum would bump the price to $325,000 and then have the seller give you a credit for $25,000 for the total repairs. And I'll walk you through that when the time comes. It's just a little bit unique in how we do the financing and the contract on the VA renovation program. And we know that I love this because it helps to keep our veterans from using credit cards, and we get our sellers excited to accept offers. And for disabled veterans, like all VA loans, we waive the funding fee. VA waives the funding fee if the veteran is disabled or receiving disability income. Here's a project I just recently completed for a VA renovation, and I love being part of this process. The veteran lived in the property while all the renovations were being completed and was first a little bit nervous and just is really in love with his home. So how do contractors get paid? Up front, while we're in escrow, we have a package of forms. It's about 3 documents long, super simple, super easy for contractors to complete. When I worked at Wells Fargo in the builder division and then Bank of America as well, when we were doing the 203K program, the list of requirements for the contractor was pretty extensive, and it was difficult to get contractors onto the approved list. And that's not the case here. We don't have the buyer obtaining multiple bids. We're not going to dig through tax returns of the contractor. We're just going to have a one-page profile, take a look at that. It'll list some of their recent projects. It'll list their total assets. We just want to make sure that they have assets to complete the program or to complete the project. We need a copy of their license and insurance. And then we set up a profile for that contractor. Next, when we get a copy of the bid has to break down materials versus labor cost. Our first disbursement is going to be either 50% of the bid or the materials cost, whichever is less. In most cases, we're going to see, I would say if the project's below 30K, a materials cost for the initial disbursement. Once we start getting over that 35, 40,000 mark, it'll most likely be 50% of the bid. After the loan closes, we send the first check to the homeowners, and it's sent out within 5 to 7 days. It's a dual party check that both the homeowner and the contractor have to sign, and we FedEx that overnight. The work gets completed, and then after the work is completed, we order a final inspection. The appraiser re-inspects the property, confirms it's complete, and the remaining funds are dispersed to the homeowner and contractor through one dual party check. And that's again within 5 to 7 days of the project getting completed. If the work is over 50K, which can apply for the HomeStyle and for the FHA 203K, or if there's any structural repairs. Common question and answers, do we require more than one bid? Nope, if you're happy with your first bid, then we'll move forward with your first bid. Can the homeowner do the work on their own as self-help? The answer here is no. The reason is because we want the person that's working on the project to be working on the project full-time, not just nights and weekends. And the homeowner can do some small work like painting is not a problem. Can homeowners work with multiple contractors? Here the answer is yes, and sometimes that happens with very large projects. There's contractors with different specialties, and we have no problem setting up multiple contractors on one project. I'm here to help answer your questions, so please call me if you need anything. I would love to help you on your next renovation loan and have your home reflect your style. Thank you so much and have a great day.